Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. In this episode, I'm going to cover another very interesting project which I feel like this project has very high potential not only in the short term but also in the long term. And this project is called Mirror Protocol, right? So again, as usual, if you guys want to learn more about Mirror Protocol, you can go to mirror.finance and read through their docs and understand this project to do your own research before you put any of your money in this project. So what is Mirror Protocol? So Mirror, assets reflected on the blockchain, right? So basically this is a protocol where you can create synthetic assets in real world. Let's say for example stock, a Tesla stock or Amazon stock or Netflix stock or any of those things, or even gold or silver commodities. Anything can be synthetically created in this protocol, right? It's similar to synthetics, but it's in many ways different, and it's also not a part of the Ethereum blockchain, right? So to learn more, read the docs or the white paper and join the community on Telegram and Discord. So I would highly recommend anyone to read their docs and understand the white paper before you invest in this project, because I believe that this is a really cool project, and if this project aims to create whatever it's aiming to create in its white paper, I believe that this project will definitely like be one of the most premium projects in the short term as well as long term, and it will definitely shoot up in price, right? So how it works: Mirror Protocol allows the creation of fungible assets, synthetics, that track the price of real world assets. Mirror synthetics are intended to be used as key building blocks in smart contracts and to bring the world's assets to the blockchain, right? So this project is exactly in a way like synthetics protocol on the Ethereum blockchain, in the sense that this project aims to create synthetic assets on the blockchain, on the Mirror protocol, right? Using information from several external oracles, and aims to create all the real world stocks, bonds, ETFs, like commodities, everything into the blockchain, right? So that's pretty much the main selling feature of this Mirror protocol. So to mint a mirror asset, which is an M asset, an issuer must lock up to more than 150% of the current asset value in Terra stablecoins or M assets as collateral. So the main thing that you need to understand is, in order to create, let's say for example, you want to create a synthetic version of Google stocks or something like that, right? Which will be called as M asset or M Google, right? In this case, because it's a mirror protocol, so it has a M prefix before it. And not only do you have to have greater than 150% of the asset that you're aiming to create. The asset in this case is Terra stable coins or M assets or collateral. You would also need to make sure that the collateralization ratio is always above or equal to 150%, right? So let's say you want to create 100 units of M Google, right? As a synthetic asset on the Mirror protocol, you would need to have a Terra stable coins, which could be a USDT or a Korean, Korean currency, or Korean won, or Canadian dollars or British pounds or whatever. These are stable coins that can exist on the Terra blockchain, right? So you need to first buy Terra tokens or buy Terra coins, and then you have to burn them in order to synthesize or mint UST or Great British Pounds or Euros or whatever as coins, stable coins on the Terra blockchain, and you need to bring those stable coins, and you need to have over 150% collateralization ratio percent in order to mint another synthetic asset. So it's kind of like a complicated process, but it's in a way pretty straightforward if you try to understand it, right? You basically have to go through the docs and read through the white paper in order to understand the details of it. but that's pretty much how you have to, like, how you can create your own synthetic assets on Terra, on Mirror protocol, right? So if the value of the asset rises above the collateralization threshold, the collateral is liquidated to guarantee solvency of the system. So again, if the value of the asset itself that you create it rises consistently above the collateralization threshold, which is basically 150%, the collateral is liquidated to guarantee solvency of the system. So basically, you will be liquidated, which is kind of like a common theme in many of the assets that involve synthetic assets on the blockchain, or borrowing, for example, right? So it's kind of like a standard kind of percentage which ensures that the system is solvent, right? So that's pretty straightforward. If you see, to target the price of M assets, the system reads an underlying asset prices via a decentralized price oracle. Prices are updated every 30 seconds, right? So in order to make sure that the Google stock that you're creating in Mirror protocol, which is M Google, has the same price, or has the same price trackings of the real Google stock that exists in the real world, M assets, or Mirror protocol uses the an oracle system, which is basically a decentralized oracle, and in this case it's band protocol. They're not using chainlink, they're using band protocol in this case, and this oracle price feed always updates every 30 seconds, right? When the price of the M asset drifts significantly from the primary market, traders are incentivized to purchase or sell the assets to mint or burn to claim the collateral. So basically, there is a chance for you to make profit. Let's say if one Google stock is trading at $100 and one M Google stock is trading at $90, then you have the opportunity to buy you have the opportunity to do arbitraging, right? In this case, you are doing arbitrage because you know the value of the true asset, and there's a lag, or there's a mismatch in price feeds due to the delay from the price oracle, and you can take that to your advantage in order to make sure that you gain a profit, either by purchasing or selling the asset, or to mint or burn to claim the collateral, right? So that's a pretty cool feature for a Mirror protocol. To burn M asset, the issuer must burn the equal amount of M assets issued when opening the CDP. The collateral is then returned to the issuer. So basically, if you want to get back your UST, or Terra version of your Great British Pounds, or Terra euros, or whatever underlying assets that you have used to synthesize these these artificial or synthetic mirrored version of the assets, then you need to just burn the asset in order to get back your collateral, right? Which is a pretty straightforward answer, right? So you can trade mirror or mirror based assets in Mirror wallet, which you can clearly download based on the instructions that they gave. And TerraSwap is also a place where you can trade M assets, which is basically any mirror based protocol, or any form of synthetic asset that you create on the Mirror protocol, you can trade it on TerraSwap, right? So that's pretty cool. Mirror web app is you can basically download a web app, or use a web app to trade, mint, and govern Mirror protocol. METH, trade M assets on Ethereum. You can even use it on Ethereum, which you can basically trade on Uniswap or any other DEX on Ethereum, right? Powered by Terra, available on the interchain. Mirror smart contracts are built on Terra and COS M Wasm, and leverages Terra UST as the collateral asset, right? So basically, Terra UST, which is basically UST, is mainly used as the building block in order to create new mirrored assets or synthetic assets, right? And this is basically built on Terra and Cosm Wasm. So it's basically based on the Cosmos ecosystem, and that's why it's kind of like interoperable, and you can clearly use it with Ethereum. And I also believe that you can use it with Binance Smart Chain, because there are several M assets that you can trade, or you can exchange, or you can even provide liquidity on PancakeSwap. So that is also a feature available, right? So that's pretty cool. So again, the Mirror protocol is entirely built and governed by the community of MIR token holders, which is the native token of this block of this ecosystem, which is fairly distributed via liquidity and platform incentives without a team or investor pre-mine, right? MIR tokens can be used to propose and vote on important changes to the protocol here. So you can use MIR tokens or MIR tokens, which is the native token of this ecosystem. You can use that as a governance token to pass on votes and decide the direction of this ecosystem in the future, and see and be a very important part of the community yourself. And since this project was completely and entirely built and governed by the community, it's fairly launched, and there's also no pre-mine or investor or any form of big whale that's holding most of these tokens, right? So that's a very big thing, right? So in the news, they're pretty much in the news. They are covered by multiple news articles. Yahoo Finance is one of the most famous ones. Medium, again, Medium covers pretty much most of the DeFi projects and cryptocurrency projects at the moment. But you can clearly see there's a lot of hype about this project and the ecosystem in multiple different news media, right? So again, it's a pretty cool project. Overall, what this project aims to do is basically create synthetic assets on the Mirror protocol, and these assets will be named as M assets, or if it's gold, it's going to be M gold. If it's silver, it's going to be M silver, right? So these will track real life asset prices based on a decentralized oracle. In this case, it's going to be BAN protocol, and this price feed kind of updates every once in 30 seconds. And during times where the price of the synthetic asset is different from the price of the actual asset, there's an opportunity for traders to make a profit and interact with the protocol in such a way that if they're aware of how to take advantage of these differences, they will definitely make a profit, right? So that's one way by which synthetic asset holders can keep track of and have an opportunity to profit. Moreover, all you need to do in order to create new M assets is a Terra based stablecoin. It could be any stable coins, but in this case it's primarily UST, which is United States dollar based stablecoin on the Terra blockchain. Again, if you want to know how you can create these, you can watch several YouTube videos that say how you can mint UST. But UST is basically the building block for Mirror protocol based synthetic assets, right? So if you have UST, you can make them as a 150% collateral, and make sure that whatever asset that you're minting stays within the collateralization ratio, otherwise you will get liquidated, right? So that's pretty much the overview. Again, mirror.finance is the place where you guys need to do your own research. You can find the white paper and other documents, right? So let's look at the CoinGecko page for Mirror protocol. So on CoinGecko, this token is currently ranked 160th based on market cap on CoinGecko, and this token is currently trading at $4.91. And after the dip in the weekend, this token has pretty much recovered just like many other high quality projects, and it's currently about at about 9.9% in the past 24 hours, right? Which is pretty cool recovery. Again, the market cap is $192 million in market cap. Again, although you may think that this project is above $100 million in market cap, I still believe that this project is highly undervalued, because as you guys know, many people use Synthetex as the main hub for creating synthetic assets on Ethereum. But since Ethereum is kind of like facing this big gas issue and slow transaction fees issues, it's basically going to be a matter of time before all the Ethereum whales start realizing that Mirror protocol is offering that in a much more cheaper and interoperable manner with very low fees. And it's the same principle as like synthetics, but this project is basically having low fees, high throughput times and processing times, and they will start migrating to Mirror protocol, right? So I still believe that this project is completely undervalued and it's off the radar for many people right now. But you can still see that it's only a matter of time that this token will kind of creep into the top 100 ranks on CoinGecko and on CoinMarketCap, right? So keep an eye out for this token. You can also see that the maximum supply is only 370 million tokens. Although it's not my personal favorite when it comes to like tokens that are above 100 million tokens in maximum supply. This token is not really that bad compared to many other tokens, right? And if you see the circulating supply, you can see that it's there's only 39.3 million tokens in circulation. So you can kind of in the short run expect to see more of an inflation on the token holders, where when this token gets injected into the ecosystem or market, the temporary value of the token for the short term would be relatively low, right? So that's something that you should kind of like be concerned about. But at the same time, if you look at the project itself, it's highly interoperable. There's a lot of opportunities for people to create new synthetic assets on the Mirror protocol, and this can definitely rival synthetics and even overtake synthetics in the long run, right? So this project again, based on its strong fundamentals, I wouldn't really worry about its max supply and its current circulating supply. But although that would be the case, the fact of the matter is, due to the very small circulating supply that exists for this token, you can definitely expect more and more token to be released, which will kind of in a way devalue everybody else's token value, right? So just have that in mind for the short term. But for the long term, I do believe that this project has incredible potential, right? So if you look at the charts for this token, you can clearly see that the interest has spiked recently. But if you take the data since early December 2020, it was trading at $1.76, and it was kind of like in the $1 to $2 ranges between that area till about early January, right? And after January, you can clearly see that something happened and that made this token kind of like spike up, and it reached an all-time highs of about $7.31 in that area. And due to the recent crash that happened in the past by the end of last week and in the weekend, you can clearly see that the token reached a low of $4.27, where I personally feel like it would have been a grab if you guys definitely managed to grab this token at the time. But now you can see that it's on a path of recovery, right? So again, this token has incredible potential. If you are planning to buy this would be a really good entry point to buy it with USD Tether, or you can buy it with Bitcoin in some exchanges. We'll go through the exchanges pretty shortly, but this would be a really good point to buy, because if you see, it's at its relative lows, right? And it is definitely poised to go up. And as more and more people start realizing the value of this project, you can understand how this project is going to perform, and it will definitely outperform its recent all-time highs, right? So that's definitely coming for this project. Again, if you're a short-term hodler or a long-term hodler, you can definitely buy this token at this price, because it's a really good price point, right? So if you look at the Bitcoin comparative, you can clearly see that the trend has similarly been like it's been kind of like a parallel. It has sort of like a mirrored, if you know what I mean, the dollar comparative. And if you see, although it was the Bitcoin comparative was not at its all-time highs in the time when the dollar comparative made its all-time highs, you can clearly see that the all-time highs of 16,400 Satoshi, and if you see the price right now, it's 9,000 Satoshi. It's kind of like almost like a 50% discount, right? So that's a pretty good buy in my opinion. If you have some form of some Bitcoin Satoshis, that you want to invest in a really interesting project like Mirror Protocol, right? So again, for Bitcoin comparative and for the dollar comparative, it's a pretty good buy. If you are obviously you're interested in buying this token after doing your own research, you can pretty much buy it with Bitcoin or with USD Tether or any form of stable coin at this price point, and you would still be in the right zone, right? You can also see that the volumes have pretty much been spiking, and that's a good sign that more and more traction is coming to this project. If you look at the the markets where it's available. It's available in Uniswap V2, OKEX, which is a centralized exchange, one of the top, tier one exchanges, KuCoin and Bitmart, right? Although I wouldn't recommend Bitmart, any of the other top three exchanges would be fine. One other surprising thing is this token, I believe, can also be purchased on PancakeSwap, which surprisingly is not in this list. So that's again a very cheap and a quick way to buy mirror protocol tokens or mirror tokens. I believe that I have a feeling that I've seen this in PancakeSwap, but I may be wrong. But at least some of the mirror assets are definitely available on PancakeSwap, right? If you don't want to buy it from PancakeSwap, or if you feel like it's not available in PancakeSwap, you can buy it from OKEX or KuCoin. Although I would recommend you guys to immediately remove your tokens after buying it from centralized exchanges, and you can store it in your wallet for long-term or short-term hodling, depending on your needs, right? So overall, what I think about this project, I think this project has really good potential to grow even further, even though it's kind of like sitting at $190 million in market cap right now. I believe that this project has a high chance of crossing $500 million in market cap by the end of this year, and it can potentially go even higher, right? With regards to the price point, a $10 MIR token is coming pretty soon, since it's a very valuable governance token, and since it's kind of aiming to bring the real world assets into blockchain. I believe that this project will definitely have a very long way to go. And as more and more traders or stockbrokers or people who try to trade stock markets on a daily basis realize the potential of this protocol and try to understand blockchain in general, right? They will kind of migrate to these kind of projects. And if this even gains a tiny fraction of the stock market share that it's currently that's currently there in the real world, this project will definitely skyrocket, and it's going to make all of its early investors much more richer, right? So remember, guys, you guys are not regular investors, but you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please click the like button and subscribe for more videos. See you in my next video. Bye.